Hi everyone, it's Marissa and Matthew here from Rise High, and today we're talking about help and grants and incentives that you can access if you're a first home buyer. So obviously being a first home buyer can be a bit scary, a bit daunting, and one of the big issues that people have in getting into their first home is often a deposit. Is that right, Matthew?
Most definitely, yes, it is.
So I've asked Matthew to join us today. He's one of our first home buyer experts in our team, and we're going to be going through some of the government assistance that you can tap into to help you get into your first home sooner. So thanks for joining us, Matthew.
That's okay, how exciting.
Yeah. So Matthew, let's just start by listing some of the grants and schemes that are available for first home buyers at the moment.
Yeah, certainly. So we've got the First Home Owners Grant, we've got the First Home Guarantee, which is formerly known as the First Home Loan Deposit Scheme. We've got the Family Home Guarantee, the Family Home Super Saver Scheme, and we've got another one that might be coming soon that we'll share at the end.
Awesome. So there's quite a few schemes and grants available, and of course, as part of our service at Rise High, we'll go through your individual circumstances to work out which is the right scheme and grant for you. But what I want to do now is actually just drill down into some of them, all the grants and schemes that you talked about in a bit more detail. So let's start with the First Home Owners Grant. What does that mean, and who's eligible for that?
Yeah, definitely. So the First Home Owners Grant, which is generally referred to as FHOG, FHOG, is a government grant where you may be eligible for $15,000. There is some criteria that you need to be aware of with that. So it is for brand new homes only, so it doesn't include established properties. So that would be either building a brand new home, constructing a brand new home, or potentially purchasing a brand new home, like a turnkey type of example. It must be your owner-occupied property, so your principal place of residence. There is a cap on the market value of that at $575,000 or less to be eligible for that, and at least one of the applicants must be a permanent resident or a citizen. And lastly, you do need to be a genuine first home buyer, so if you have purchased a property before, you won't be eligible for this particular grant.
Yeah, excellent. So that's a bit of information about that one. Let's move on to the First Home Guarantee, which I think you said was formerly the FHLDS.
Yes, they changed the name just to make it confusing.
That's a bit of a tongue twister. So this is called the First Home Guarantee. Tell us about this one. What does this mean and how does it work?
Yeah, definitely. Well, the First Home Guarantee is probably a bit easier. It rolls off the tongue a little bit better. So the exciting thing with this is that it will allow potential, again, genuine first home buyers to get into their home with as little as 5% deposit. So we do need to be aware that there are some government charges that do go on top of that 5%. So you need to cover your stamp duty and associated costs, and then have an additional 5% deposit. But that's obviously much better than the general 20% that the banks would like to see. So
this guarantee scheme is a bit different to the one that you just discussed, because the one that you just discussed before was a grant.
Correct.
Where the first home buyer gets a cash injection to top up their deposit.
That's right.
In this situation, they're not getting a cash injection, but they're able to borrow a higher percentage of the purchase price. Is that right?
Definitely, yeah. So less money that you'd need essentially to get into your first home.
Mm-hmm.
Like you said, the first one is giving you a cash boost. In this case, it's substantially reducing the deposit that you require to get into that home.
And what's the benefit of the guarantee for the borrower?
Yeah, definitely. So one thing that's which would save the borrower potentially a lot of money would be the lender's mortgage insurance that they would save on. So the government, as part of this guarantee, is sort of guaranteeing that 15% for the banks, and that avoids having to pay the lender's mortgage insurance, which can be $10,000, $20,000, $30,000 at times.
That's a huge saving, isn't it?
It's a massive saving.
That's a huge saving. So that would enable people to get into their first home sooner with their own savings, with their own money. But it means that they don't have to pay lender's mortgage insurance, saving them tens of thousands of dollars.
It is, definitely. It's a massive saving. There are a few other things to be aware of as well. So if you're an individual, you must be earning less than $125,000. If you're a couple, it would be $200,000. So that's sort of the maximum that you can earn in that previous financial year to be eligible for that grant. It must be, again, your owner-occupied property or your principal place of residence. There are some caps on the purchase price of the property. So if it's in the city or surrounding areas, it's $600,000.
Yep.
If it is in the country areas or the rest of the state, $450,000. Now, in this one, you must be an Australian citizen.
So not eligible for permanent residence?
No, you must have had citizenship to be eligible for this grant. And once again, you do need to be a genuine first home buyer, so the government would know if you have purchased a property before.
Yep, awesome. Sounds great. So that's the First Home Guarantee. let's talk about the family home guarantee.
Yeah, so just another one that we've got to help clients with, which is really exciting. Now, the good thing with this particular guarantee is the deposit requirement is less. So rather than needing the 5% deposit, in this case, you do only need a 2% deposit.
Yeah, wow.
So that's a big, it's a 3% less again, which is quite a substantial number. Just to remember, you still do have those government charges, which is around 5.8%. So same as the last scheme, you will save in paying lender's mortgage insurance. That is one of the advantages of the scheme. So there'll be a substantial saving there. This one is for single parents. So this scheme in particular is targeted at single parents with at least one dependent child. Again, you must be earning less than $125,000 per annum. It must be your owner-occupied or principal place of residence, and once again, you do need to be a citizen for this one, so permanent residency unfortunately wouldn't be eligible.
Yeah.
And you can't have another property at the present moment in time, but you can have owned a property previously. So this one isn't just for first home buyers.
So this one you don't have to necessarily be a first home buyer, you just have to be someone that needs a home now.
Correct,
That
that's
doesn't
right.
currently own their own home.
That's right. So even if you have purchased a property before, you could potentially still be eligible for this grant.
Yep, awesome. Shout out to James, Christine, Todd and Catherine. Thanks for joining us, guys. If you have any questions, shoot them through. We're here to answer them live for you today. We're going to move on to the First Home Super Saver Scheme. So that's also a bit of a tongue twister. First Home Super Saver Scheme.
I'll let you say that one just to be safe.
Tell us about that one, Matthew.
Yes, so this is, and some people may have already heard of this, essentially is where you can do extra voluntary super contributions. So basically on top of, so your work's going to be paying you, it might be
the superannuation guarantee.
Superannuation. So that's not included, but it's anything that you voluntarily decide to put in your super above that. There are some rules and regulations around that, so it does need to sit there for 1 year before you can access those funds. You can apply for up to $15,000 per year. So if you were to put away, I don't know that anyone would be necessarily, but $30,000 in super, you would only be able to access $15,000 up to a cap of either $30,000 or $50,000 in total, depending on when you started those contributions. So if you started them pre-2021, you can access up to $30,000 in total. If you started those contributions after that date, you can access up to $50,000.
So it's basically a way of forced saving, isn't it?
It is.
And it's a way that you can actually ensure that you're saving that regular amount in an area that's pretty safe, that you're not gonna be tempted to spend on something else. So it's a great way to save in the super and then being able to use that towards your house purchase.
Yeah, that's right. If you can build that into your budget, I guess, you're not going to see those funds at all. They're already going, and then your deposit is starting to save up sort of on its own accord.
Yeah.
Once again,
I think if people want to make those voluntary contributions, they can probably talk to their employer to actually make those voluntary contributions regular and consistent from the employer's end, so they don't even have to think about it.
That's right. I think that would be the best way to do it. So you're not actually seeing those funds, and you build your budget around the remaining income that you'd be receiving. Yep.
Now, you also teased us at the beginning, Matthew, saying there's another scheme coming up soon.
Yeah, so I've only got
talk to us about that.
Yes, I've only got some basic information about this, but we'll obviously let you know more as we find out more information. So it was announced by the Labor Party. It's likely to begin in July of 2023, so the end of this financial year. It's looking like that you mainly need a 2% deposit, so that's obviously really promising. And there would be a shared equity scheme. So it's going to be called Help to Buy, but essentially it's where the government are going to share in the equity of the property that you're purchasing, up to 40% if it's a brand new home and 30% if it's an established property. Now we do need to wait for more details to be announced because there's only sort of basic information, but I believe that will be coming soon.
And this shared equity scheme, this basically will allow people to buy homes that they traditionally weren't able to afford on their own.
That's correct. Yes.
Because it means that instead of buying 100% of the property, they're buying, 60% or more. They're buying a percentage of the property.
That's right.
And the government is owning the other percent.
That's correct. Yes.
So it actually will allow people to purchase a property that is more expensive than what they've been able to afford before, which is
that's right.
Which is great. Which might be the difference for some people between getting into home ownership versus not getting into home ownership.
Most definitely, and 30 or 40% is a big number when you look at it. That can be an additional 30 or 40% you may be able to purchase for. So,
and on top of the Australian Government Labor Party announcement that's going to be happening soon. At Rise High, we do have access to some lenders that will do a shared equity arrangement in South Australia for a similar type of arrangement for South Australian properties. So definitely that's something that we can look at for you if that's going to be suitable for your needs.
Definitely. Reach out to one of your mortgage brokers at Rise High and we can certainly walk you through it all.
So there you have it. That's a bit of a quick summary of some of the grants and schemes that you can access as a first home buyer. There are definitely some other ways that we can get you into your first home sooner if you don't have as much deposit as you would like. So please don't hesitate. Come and speak to the brokers at Rise High who specialise in first home buyers, and they can help put you on a plan, put you on a path so that you can achieve your home ownership dreams sooner. Thanks for tuning in, and we'll see you again next time. Bye.
Thanks, bye.